morning and welcome to the VSA Morning Miner. It's Wednesday, the 29th of January, and I'm joined by Paul Rankin. Paul, how are you today?
I'm very well, thank you, and awfully nice to see the sun out with a blue sky.
Very good. Right, there's a bit of news out today. We'll start with Fresnillo, the largest stock, and then we've got a couple of VSA clients with news out that's come out over the last 24 hours or so. But yeah, Paul, Q4 update from Fresnillo.
Yes, that's right. They had production in line with, or in the case of gold, slightly better than their guidance that they gave at the start of the year. Lead and zinc production was up significantly over the year, as well as the cost performance and stronger metal prices all help things along here at this point. The quarterly silver production, however, was down by 5% on a quarter-on-quarter basis, primarily due to cessation of mining at San Julian mine in November, and there was lower ore grade at Juanicipio in this mining sequence here. Although they did have higher ore grade at the Saucedo mine for the same reason. Gold production came in up 30% on a Q-on-Q basis to 204,000 ounces due to higher ore grades as well, although they did have uh, decline in gold production from the Noche Buena pads as that mine has ceased mining, and now it's just residual leaching at this point. Full year silver production was 56.3 million ounces, which was flat from the full year and just inside the guidance that they had given of 55 to 62 million. So it's looking like pretty stable here. The gold production demonstrating that Fresnillo is, in fact, from a revenue purposes, a gold company as opposed to a silver one, whereas still silver by volume, of course. But otherwise, fairly stable there in this report.
Yeah, just nudging in there on the silver side. Right, moving to a couple of VSA clients. We had some drilling results out from EQ Resources from their Mount Carbine Queensland tungsten operation.
Yes, these specific drilling is now that they've completed the eastern cutback in the Mount Carbine mine, they have access to a production level they call 345, which is a mining bench in that area. And these assays are from drilling into that portion of the ore zone, and they look pretty good at this point. 1 to 8 meters, all at grades highlighted of well above 1% tungsten trioxide. This is part of the mining sequence now, where they get what they say into the Iolanth vein package, part of the main ore body at Mount Carbine, which they have scheduled for production beginning in February. And this part of the stage 2 open pit mine sequence.
Yeah, there are some really good grades at Mount Carbine. Obviously, as a restart, the mine plan was somewhat dictated to the company and getting through the initial um, more variable grades in the main part of the pit, where the grades coalesce at depth. They already saw some bumps in grade, and now the main ore body they're starting to get access to, which is much higher grade, and should help the company move into profitability over the next over the coming quarters.
So making progress there. That's good to see. We'll see how their actual recoveries turn out in the coming next 2 quarters for sure.
Also, news out from Winsome.
Yes, Winsome Resources, which is ASX listed, but lithium explorer in Quebec. This specific news out late Monday on their carbon sequestration plans in Quebec, and specifically for utilizing the tailings from the Renard Diamond Mine mill site, which they acquired last year, in order to sequester CO2 as precipitated calcium carbonate. They have signed MOUs with ARCA Climate Technologies, Xterra Carbon Solutions, and Aquari, and all three of these have expertise in implementation of carbon credits and techniques for evaluation of just how they might go about uh, participating in the voluntary carbon markets by being able to sequester CO2 there.
Okay, thanks, Paul. If there's nothing else, we'll call it a day.
Okay, yeah, very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.